Welcome to HansaMatrix Investor Webinar. Today we are hosted by the CEO of HansaMatrix, Ilmārs Osmanis, and CFO, Māris Macijevskis. As always, we will start with company's presentation, which will be followed by questions and answers session. Therefore, you are kindly invited to participate by typing your question in the questions box, which can be found in the settings panel zone. Ilmār, Māri, I invite you to start the presentation.
Good morning, everyone who joined our webinar on this kind of early morning. And I hope everyone is kind of stays COVID negative up to now. Hopefully nothing changes during our webinar. So today myself, Ilmārs Osmanis, and Māris Macijevskis, our CFO, is doing presentation. I'm the one who starts it. So HansaMatrix is Innovator Manufacturing Solutions high-tech group, and we are going to present Q3 and 9-month results of 2020. So we're beginning with the executive summary. 2020 Q3, what the business trends and changes. So of course, topic number one, it's COVID-19. And as a manufacturing company, we cannot send home really. We cannot work from home. We need to have workers place hands on machines, products, and doing job actually in factory. As well, they are having, of course, factories are not constructed considering we need to have individual protection for COVID-19. So we have to take extra measures to implement certain procedures here. We have developed protocols, COVID-19 protocols. They are in place. So far we only have had two incidents which turned false, because after careful checking analysis, the persons who were suspected might be having virus actually didn't have that. So far no big impact. However, of course, work requires a lot of protocol things to be done, and keep people a little bit away from each other. So of course, efficiency of the work is a little bit affected with this. From other hand, also COVID-19 influences supply chain. There are certainly disruptions. Transportation network functions differently than before the COVID-19 pandemic started. Still there is disruptions. They are becoming kind of less. Maybe a number is becoming less and less. It's reducing, but still there is changes in supply chain performance. From other hand, we are Q3. We kind of already faced first wave of COVID infection, ups and downs, and enjoyed a relatively good summer. And during that summer, we already are experiencing changes in world's business, world's economy, also which impacts us. So the products that are required for remote work, remote data connectivity, the growth demand for those products substantially are growing. And we experienced that from our customers who placed bigger orders. We needed to restructure our capacity to facilitate that, and partially result of that you are seeing in Q3 results. Also you should expect more general technology penetrated economy, step by step coming, where of course data networks, robotics and automation and medical equipments become the priorities in manufacturing, and much more focused. Including issues like manufacturing independence from Far East suppliers and nearshoring. So all that turns positive towards HansaMatrix future business. Q3 summary. Generally, Q3 third quarter been very good for. I think here we are. It's been very good. And I see here typing errors in a table. So we are comparing then Q3 2019 and next column is Q3, not Q2 as typed. So Q3 produced, we are reporting a revenue 6.55 million, which is 7% year-to-year growth from year before. And we are experiencing probably historically highest EBITDA. Revenue per quarter also 1.25 million, which is plus 32% comparing to a year before. EBITDA margin stands at 19.2, which is also very high in historic angle. Net profit was positive 0.33 million euros. And net profit margin is 5%, which should be regarded as excellent. Yeah, here comparing to peers, HansaMatrix EBITDA margin second highest among industry peers we are comparing ourselves. So, but this is here 12-month TTM. Of course, result is very much impacted for the period of the first COVID wave and disruptions happened during that period. So 12-month TTM is 12.33 for us, and we're having one champion here, 13.47, which is finishing up here. But generally, we can see from the Nordic manufacturers highest margins here, which are probably can be explained by supporting measures from governments and of course also some medical equipment manufacturing increase during the period. So and here we are going into Q3 results of 2020 in detail presentation. I'll pass microphone to Māris Macijevskis, CFO. Yeah, please, floor is yours.
Thank you, Ilmārs. Yeah, Māris here, CFO of the company. So in the third quarter of this year, the performance was strong, and company revenue amounted to 6.5 million, which was a 7% year-on-year increase and a 24% increase as compared to the second quarter of 2020. Well, the increase in revenue is explained by the strong and growing demand in data network product sector, influenced by the increasing necessity for remote connectivity globally. So going further, quarterly revenue by region, three main regions to which manufacturing services are provided were Baltic states with 37% of total, Nordic countries with 19%, and the rest of EU countries with 27% of total. Services provided to the companies outside the EU this quarter were 16% of total. And this quarter, the revenue on year-on-year basis decreased in Nordics, the rest of EU, and in the Baltics, but revenue outside the EU increased significantly, which is explained by the long-term manufacturing contract execution, which was signed in 2018 with international customer in industrial segment. Next, going to revenue analysis by sector. Two main revenue sectors were data networks products with 46% of total and industrial with 36% of total sales. IoT, optics and photonics and other product sectors were smaller and were in the range from 5 to 11% of the total revenue. Well, in third quarter of this year, revenue in data networks and other product segment increased significantly, which is explained by the growth in demand for the data networks products and for the and by the long-term manufacturing contract execution signed back in 2018 with international customer in industrial segment. So the other segments this quarter were either flat or decreased. Next, about profitability results. As Ilmārs already mentioned, this quarter, the historically highest reported EBITDA was achieved and amounted to 1.25 million euro, increasing by 32% on year-on-year basis and by 137% compared to the previous quarter, Q2 of 2020. EBITDA margin in this quarter was at 19%, and company operated with net profit of 330,000. The high EBITDA margin this quarter is explained by the increased proportion of higher added value products in manufacturing. Next, looking at the results of aggregate 9 months, the aggregate revenue achieved was 17 million, which is still 5% year-on-year decrease. And the decrease in revenue was influenced in first and second quarters of this year by COVID-19 situation and challenges both in supply of components necessary for production and in postponement of orders for some customers. Next, revenue split by region. Key regions were in 9 months were Baltic with 40%, Nordic countries with 24%, the rest of EU 25%, and outside the EU 11%. With most of the regions revenues decreasing on year-on-year basis, except the outside EU sales, which has increased quite significantly. Then in 9 months of 2020, two main sales sectors are data network products and industrial products with 43% and 40% proportion of the total revenue. IoT, optics and photonics and other product sectors are comparably smaller than these two, and this quarter are in a range from 5 to 6% of the total revenue. In third quarter of this year, most of the sector revenues decreased, except for industrial and other product sectors, where revenues increased by 2 and 6% respectively on year-on-year basis. Next 9 months profitability results. EBITDA achieved amounts to 2.2 million, which is still a 24% decrease compared to 9 months period of 2019, and net loss result was 488,000, and 9 months EBITDA margin was 13%. Well, as mentioned previously, company profitability in 9 months of this year was influenced by first quarter and second quarter COVID-19 situation, which resulted in supply chain disruptions, obstructing manufacturing process and in postponement of orders in some sectors for clients. Next, trailing 12 months results, ending with third quarter. In 12 months, the company achieved 23.6 million revenue, which is 3% up compared to the trailing 12 months revenues reported 1 year ago, and EBITDA achieved in last 12 months amount to almost 3 million, but which is still 18% down compared to the trailing 12 months sales result of third quarter of 2019. And the company finished last 12 months with 12.3% EBITDA margin and net loss of roughly 400,000 euro. And now I give floor back to Ilmārs to continue.
Yeah, thank you, Mari. I'm updating you on other activities. Q3's R&D revenue. R&D revenue in quarter 3 a little bit follows the pattern of Q2. The fact is that due to funding and cash flow kind of restrictions going through this COVID, and also uncertainty of future activities. The R&D activities were reduced during this period by our customers, by LightSpace, and by company itself. So this also reflects into revenues as well, and also some of the products that fall into category R&D manufacturing was also reduced in reduced demand in the market. Still, Q3 we are seeing reasonable share of turnover, which is like close to 4% here, 3 point something. So investments during Q3 and 9 months, investments as well were reduced during this uncertain period, in order to conserve the cash, which is kind of during situations important. And this reflects in figures here, unusually low, like for our company, it's 0.7 million euros over 9 months. The focus in doing investments was mostly to maintain manufacturing equipment and other assets and keep our capacity at possible maximum. Investments in associated companies, subsidiaries, Q3 and 9 month period. LightSpace Technologies, practically no investment in Q3, and overall 500,000 investment in 9 months to finance R&D commercialization, 3D display technologies. That was all. As accumulated investment at Q3 into LightSpace amounted to 8.66 or 8.7 if we are rounding this up, where 3.7 is equity and 4.9 is convertible loan. Zinātnes in Q3, HansaMatrix took over 100% of the shares in Zinātnes, bought out outstanding shares, other shares, which was with the competence center letter and Softtechnica to become 100% owner. Also, and the amount kind of invested was around 5,000 euros. Roughly 50,000 euros investments were done in Q3 and 0.18 million euros in 9 months in form of convertible loan in Zinātnes for industrial real estate project development of Riga airport. It's more to maintain the real estate land plot and maintain in good accurate order. As of end of 2020 Q3, investment in Zinātnes is totaled to 1.79 million, roughly 90 million euros, which out of which 0.99 million is convertible loan and 0.806 is equity part. So business development of LightSpace Technologies, I think most important event in Q3 was signing grant agreement contract to European Commission that provides grant funding from at amount of 2.25 million to LightSpace Technologies to develop medical use application AR headsets, and also in the same decision, in the same competition, LightSpace received 1.7 million euro approved equity investment by IEC, European Investment Council, a fund which is managed by European Investment Bank. So basically 3.9 millions were decided to provide for the company by Commission. This ends our fact session part. We are coming to questions and answers. And this time we received very late, questions received very late, so we haven't prepared the written answers. So Marta will read us the questions, and we will do answers like verbally. Thank you so far.
Yes, thank you, Ilmār and Māri, for the presentation. Before we proceed with the questions, I would like to remind to those who haven't yet submitted their questions that you can do it in the questions section in the settings panel zone. So the first question is, what are still the biggest differences in business activities compared to pre-COVID time? Anything which could change something in your business case?
Already touched in first slide, trends. So actually it appears that our strategic directions we were developing company actually stays even more strategic or more important in post-COVID economy, as US Federal Reserves had just announced in his speech at Euro Central Bank event that post-COVID economy will be much more technology penetrated than before. So and the areas, primary areas of demand increase will be remote technologies for remote work and remote data transfer and remote teaching and learning. All that is data network products and some others. By the way, AR products that develop at LightSpace Technology fall into this category as well. Then products for medicine, medical grade AR headset falls there. And so HansaMatrix already having one of the two companies in Baltics having medical certification for manufacturing of medical devices. So this will be much more procured sector in the future for us. And third, very important is robotics as well. Robotics is not higher highest here our focus, but the medical devices and data network products, this is of highest priority to HansaMatrix as well. So we believe market turns much more positive towards us. So that's answer to the first question. Yeah.
The second question, why optics segment sales have remained relatively weak for last 2 quarters?
You can explain this by yes, that's true. We are having one very, I would say, in our production we have flagship product, robotic vision product for robotics, and customer was a little bit worried about how market develops, and he slowed down manufacturing at our site for his market. And also worked on changes of models to the newer model. So this was wisely used to switch from one model to another, like upgrading product. There is nothing systemic. It's just cause of the uncertainty and really slow down of the general supply chains as well. We expect this will come back to the pre-COVID levels very soon now. That's all answer for question.
Is there already serious interest for your AR glasses and technology? And what would be the competitive edge compared to existing products on the market?
Yeah, I start with second part. The competitive edge to existing products. First of all, it's accommodation. It's like our AR glasses are next generations products that provide accommodating response to eyes. You can read kind of scientific articles, but this is the technology part. In comparison, if your audio system switches from being just stereo to home theater, which is 7+1 channel, so that's about the same thing we are doing now in AR glasses. We are switching from single plane stereo to multifocal, which will be increasing. We are increasing 3 times available visual information, and we are adding accommodation or spatial elements to all only visual objects that you can see in the headset. As an additional result comes much better image quality, which far exceeds any of the existing products. Image quality and precision and accommodation actually was the key factors required in medicine. We are seeing really serious interest from 3 global major medical equipment companies and companies that do diagnostics equipments. 2 of them are market leaders, and third is niche company. And also we are seeing similar interest from car manufacturers. 3 global brands are seriously interested in our product to use a little bit different applications. And also we recently received a request from one of the world's leading consumer electronics companies also to consider licensing of our technology for consumer market. So interest is very, very serious, and we are working towards the launch of this our professional product, and also towards proving certain technological inventions in the prototypes and building them. So that's the period we are going through. That's all answer for question.
Thank you. Now let's proceed with the questions that were sent in during the webinar. So looking at earnings from 2017, we can see that quarterly revenues are fluctuating up and down. What are the main reasons for it?
Yeah. I think here you can explain the following, that despite we are in contract manufacturing, despite our customers are long-term and they come repeating orders and repeating volumes, some customers are involved in so-called tender business and very large project business. Some are providing smooth ordering pattern. Some come with one-offs, large projects in certain periods. So when you we have 3, 4 who come, which are project based, which are more digital. You are having kind of order for maybe million or nothing maybe per period. So it all sums up, and we are experiencing this kind of fluctuation per quarters. They probably, if you look the periods like 6 months, 9 months, then they are evening, and it's much more smoother. And on top of that, also it's the quarter is comparable sometimes to manufacturing period or execution period of certain projects. So once you come order, it may come up. If you receive this quarter large order, you work towards finishing it, and you shipping it as one package, which is maybe next quarter. So revenues are next quarter. Works are added in working progress is building up this quarter. So that's how to explain this. The project nature of some of our customer businesses. That's my answer to this.
What is your expected EBITDA margin in 2 to 3 year period?
Still, if you remember, before COVID period, we were providing you medium term indication of 12 to 15% at EBITDA margin. It very much depends. It depends what mixture of products are we doing. Our data network products provide quite high margin. Our and medical devices, we are just in the very beginning, also can provide relatively higher margin for products, and there are industrial products with the average margins, and there are more like high-end consumer products or professional products that nature are similar as consumer, that with a thinner margin. So this is the mixture, basically the portfolio mixture provides us where we stand in these diapasons. We are at this point, we cannot say that this 19% as this quarter is sustainable. Probably not, but it just indicates that we can we can still be in a high end of the 12-15% interval. Maybe exceeding a little bit. I would still put this 12 to 15 as a medium term indication with a strong growth in absolute figures in turnovers and EBITDAs. That would be my answer here.
that higher added value product that generated above average EBITDA margin?
As I say, we are working with customers as a contract manufacturer, and in most cases we have confidentiality agreements, so we cannot disclose that detail. But again, products that are more complicated with more work to be put in are generally the ones who generate about average margin, and also the ones who are easier to automate, and the ones who the proportion of automated process is higher than maybe manual operations to process it. I think these things, first of all, proportion automated to manual work, and secondly complexity, general complexity of the work, more complex tend to be above average. So our trend is to look, our kind of focus is to look when we look sales and new projects that look to more complex projects, products they provide higher added value. So yeah, that's answer to the question.
Thank you. What are expected growth rates by market sectors?
I would say currently we are seeing, and you should probably, we can also see tell this is a trend. Data network products will experience much higher growth rates than maybe other ones. And both largest customers from that sector are providing us with such guidance. So that comes from the market strength, and we expect also similar things happening kind of at nearshoring edge or nearshoring angle of the market, which doesn't mean that we would not necessarily take our production from Far East supplier today, but it probably means that new products that are developed will most likely produce here in Europe, not in Far East, meaning that new products is something we are really counting on very much. Industrial will stay probably at moderate growth rates. It's still growing because electronics is penetrating that market. Optical products are really required by technology, all kind of technologies, medical technologies, robotic technologies, transportation network improvements. These require much more cameras and much more optical products. So if you buy a new car, you have added plenty of cameras around you, and they try instead of you look where you drive. So all that is growing, also the market sector. So these areas are growing faster than maybe like traditional things. This would be my answer by sector.
The next question is regarding the contract you mentioned in the presentation. So what portion of this $3 million contract for outside EU customer is filled by now?
I think we are about in half of this. And interestingly, we are receiving additional orders from the same customer just to extend currently it's been extended by 10%. So we'll see when it comes to an end if that will have continuation.
The next question, did you have any positive impact on Q3 margins from cost-saving measures, or mostly driven by the production mix in terms of value-added products?
I think certainly going into COVID period of uncertainty, we took certain measures of cost saving, especially also cash saving, which turns in some aspects as a cost savings. I would say both, but mostly I would say 20% maybe comes from cost saving, and 80 comes from the increased the much more strong ordering from our customer side.
How did you manage to acquire 25% stake in Zinātnes for only €5,000?
I would not comment this. Generally, it was agreed our option to buy buy these shares. So we are, as a company, having funding this project, also had with that certain how to say, options to take control of full company if needed for certain things. So these options were used just here and now, or last quarter.
Thank you. The next question: what are projections for labor costs?
Yes, certainly. Right now, since our volume of the product manufacturing growing, we are in a hiring mode. We are hiring people right now with a not fast temp, but few people a week in a sustainable, nice sustainable tempo. The same time, which of course it will come to the maybe some noticeable increase of the manpower during next year. But at the same time, of course, we have to also look carefully efficiency, manufacturing efficiency, and automation. So we compensate any potential labor cost inflation, labor market inflation, cost inflation by compensating that with automation. But in Latvia, historically, it's been once we come to the positive development period, then labor costs inflation goes up to 8-9% and doesn't stay at 5%, which we would like to do for planning. And when we have a some kind of crisis or some kind of in bad or bad period, then it stays on place. So in average, it's probably 5 a year if you take longer term. That's what we are calculating. And this 5 can be compensated by improvement efficiency of operation, change the structure, manufacturing, increasing automated work, and also investing in new tools and in training of people, of course. Yeah, that's my full answer. Thank you.
There is also one question for clarification of market sector profitability margins. So what are profitability margins for each market sector?
We are not providing such figures. Again, the trends are that currently the data network sector provides high added value products. And also we are having similar situation, could be in optics for certain products and could be in medical devices. The rest is more or less regular stuff for contract manufacturing. It depends. It might depend very much from customer to customer too, on complexity of product and our logistic arrangement, how they want to work with us as well. Some customers want just to buy work and margin and service from us, not a supply chain and material supply. So that influences. Then in those we are having higher margins like service margins. But we don't have such analysis, so we cannot provide that.
Currently, the last question we have. Can you disclose what portion of your data network segment production is related to 5G equipment?
We have certain products that are related. I would say today it's absolutely indication, absolutely wild indication. It's nothing. I would say it's not true, but I can say that about maybe 10-20% of our backbone related products goes to 5G, but don't take this as a reference. It's a wild guess.
All questions are now answered. A recording of the webinar will be available in the Nasdaq Baltic YouTube channel and in company's announcements. Gentlemen, thank you for the presentation and for answers given. Participants, thank you for joining and engaging.
Yeah, thank you very much for staying with us, and have a great day and stay COVID negative as long as possible. Thank you.
Thank you.
Thank you.